Owning investments from different asset class is called as diversification. In our earlier video, we have discussed what is an asset class and its types and what is the importance of diversification. This is a continuation video. If you haven't watched the part 1, the link for the same is given in the description. Let's get started. Welcome to holisticinvestment.in. Investing in different asset class ensures in the reduction of risk and increase the probability of making return. In this video, let us discuss the art of asset allocation and how to create your personalized asset allocation strategy and how to rebalance it. First, the art of asset allocation. Asset allocation is a mix of asset class of your choice in a specific ratio in your investment portfolio. The pyramid of asset allocation will give you an easy understanding of the diversification process. Old school of thought in personal finance advocates the following age mirroring calculation. Age is equal to fixed income, that is defensive. 100 minus age is equal to equity, that is offensive. That's it, asset allocation is done. But do you think it is enough for a perfect investment portfolio? It is not a general formula that everyone can use. Instead, it can only guide you to create an asset allocation strategy with minimal risk involvement. For example, if you are saving for your child's higher education, which is forward in 2 years, then equity is definitely not safe. Fixed income is a wise choice. Thus, age mirroring is not the only strategy to create your financial portfolio or asset allocation. But you cannot find out that one perfect asset allocation strategy that suits for everyone, because it does not even exist. So, what is then? There are multiple criteria to be considered while choosing your asset allocation ratio. An asset allocation strategy must be created on the basis of investors' individual goal, risk tolerance, ability, and emotional stability. To create the strategy that works for you, you need a better understanding of yourself. A sensible guideline to create a personalized asset allocation strategy involves focusing on 3 major factors. Number 1, your financial goal. Number 2, your time horizon. Number 3, your personal risk tolerance. Financial goals are unique for everyone, like saving for retirement, paying a debt, buying a car or a home, saving for child's higher education, etc. List down your life goals and be particular with your goals, like the amount that you require for the goal and the year when it is due. Some goals are purely dependent on your financial status, while some require a huge commitment of work and time, which will have an overall influence in your life. Time horizon. After listing down your goals, try to categorize it based on the time, like short, medium, or long term. For short and medium term goals, debt instruments are safe as you need capital security. For long term goals, you can prefer equity instrument. Risk tolerance. Your risk tolerance depends on your financial stability and emotional stability. In simple, the return on equity investment is volatile, which means the appreciation or depreciation would be aggressive, whereas fixed income is comparatively a less volatile investment that is defensive in nature. If you have a regular source of income and in young age, then your investment should be more aggressive than defensive. Since you are financially stable and can create more money with an ample amount of time left, aggressive investment suits your portfolio. As you approach retirement, or if your source of income is flexible, then your investment should be more defensive than aggressive. Now let us look how to use the asset allocation calculator. Keeping in mind your target, the time horizon to achieve your financial goal, inflation rate, amount you can invest every month, we have created a simple asset allocation calculator using Excel. With the minor adjustments to the equity and debt allocation percentage, you can create a customized asset allocation strategy by yourself and also check the expected return in the predefined time horizon. Download it for free from the link given in the description box below. Geological diversification and extra parachute. Diversification is done to minimize the risk factor to the best possible level. But what happens in case of tragic fall in the economy and the whole country's stock market crashes? You may suffer the loss along with the rest of the stockholders in the country. But there is always a way out. Geological diversification or international diversification is investing in share markets of foreign countries. You may find it complicated to understand an international stock market without period exposure. So you can invest in international fund of funds. International Fund of Fund is an Indian mutual fund scheme wherein the money collected from investors will be invested in another foreign mutual fund scheme. For example, Franklin US Opportunities Fund is a US based fund that invests in leading growth companies of USA. Franklin India Feeder Franklin US Opportunity Fund is an Indian mutual fund scheme that collects money and feeds the investment in Franklin US Opportunities Fund. Next, rebalancing. Once you are done with allocating your assets, over a period of time, your investment will start to appreciate in one asset class and may depreciate in the other. This will create an imbalance in the asset allocation you have created for your investment. For example, let's say you have a sum of rupees 3 lakh with you to invest. And after making all the risk assessment and asset allocation, your investment is made to be 60% aggressive and 40% defensive. The chart here shows that now is the time to rebalance the allocation suitable to your risk profile. You need to sell rupees 6,120 of equity and buy rupees 4,140 and rupees 1,980 of debt and gold respectively. Rebalancing is simply the process of maintaining the asset allocation ratio whenever required. It must be done with precision once in a year or even more frequently when the allocation percentage varies a lot. Now let's see the 4 pieces of advice you should not forget before investing. Keep an eye on your financial goal timeline. If you have your financial goal in the next year, keep your investment ready, that is liquid. If you have your financial goal in the next 1 to 5 years, put your money in a maximum return debt instruments. If your financial goal is more than 5 years away, go straight away to equity investment. Do not lose focus. Remember the risk versus return. I will be happy to show you an investment with zero risk and high return, but something like that does not exist. So remember, if you expect for a mountain of return, then the risk is already on the hilltop. The choice is yours. Play safe or play smart. Hold stocks. It is always wise to have a long-term plan, which is obviously going to be an investment in equity. Nothing gives you a return to beat the inflation as stocks. So just hold for the long run. Refresh your financial goals and investments. Sometimes you may reach your financial goal before your predetermined timeline. So refresh and review your financial goals and investment at least twice a year. Be updated. Final sum up. Never invest in something you don't understand is an advice from the most powerful investor alive, Warren Buffett. You should completely read the disclosure agreement and the terms and conditions carefully before investing. I hope to have shared my knowledge of asset allocation and asset classes. This video can guide a newbie investor to find the right path and also hold some tips for the pro investors. If you still need any clarification, then seek help from a reputed financial advisor or investment planner. But educating yourself can only give you the confidence to make the right decision. Remember, in a room of millionaires, knowledge is true wealth. A detailed blog post on this topic is available in our website, and the link for the same is given in the description box below. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.
Thanks for your detailed answer.